They told you that professional traders were born different, that hedge fund managers had some secret algorithm, some insider knowledge you'd never access. They said you needed decades of experience, millions in capital, and connections to the right people. But that's not the truth. The truth is this: 90% of your trading profits will come from just 30% of your decisions, and once you understand how the professionals think, how they map their moves, how they separate signal from noise, everything changes. Not because you suddenly get smarter, but because you finally stop trading like everyone else. I remember the first time I stepped into a real trading floor, not as a visitor, but as someone who belonged there. The atmosphere was electric, but eerily calm at the same time. Screens everywhere, numbers flashing, but the traders themselves, the ones making real money, they weren't frantic. They weren't glued to every tick. They were waiting, patient, focused on something I couldn't see yet. One of them, a senior portfolio manager who'd survived 3 crashes and built generational wealth, looked at me and said something I didn't understand at the time. He said, "Most people think trading is about action. It's not. It's about elimination." I nodded, pretending to get it. But I didn't, not then. It took years of bleeding my own account, chasing every setup, reacting to every headline, feeling that nauseating pit in my stomach after another impulsive trade, before I finally understood what he meant. The professionals don't try to catch every move. They don't try to be right all the time. They eliminate everything that doesn't fit their edge, and then they wait for the market to give them exactly what they've been preparing for. That's the 30/90 map. It's not a strategy. It's a mindset. It's the realization that your job as a trader isn't to trade more. It's to trade better. It's understanding that most of what you do in the market will be neutral at best, slightly profitable if you're lucky, or quietly draining if you're not. But there will be moments, rare, beautiful, high conviction moments, where the stars align, where everything you've studied and prepared for comes together, and those moments will define your entire year, maybe even your entire career. The amateurs chase every opportunity. The professionals hunt specific conditions. They know what they're looking for, and they know what to ignore. And once you adopt this lens, once you start thinking like someone managing billions instead of someone desperate to make rent, your entire relationship with the market transforms. But before we can build that map, before we can locate those golden 30% moments, we need to talk about why most traders never find them. Because it's not a knowledge problem. It's a psychological one. You see, the market rewards patience, but your brain craves action. Your brain is wired for survival, not for sitting still while numbers dance across a screen. Every candle that moves without you feels like a missed opportunity. Every dollar someone else makes feels like a dollar stolen from your future. So you jump in. You trade the mediocre setup because it's there. You convince yourself that this one will be different, that you can feel it, that this time your intuition is right. And maybe you win. Maybe you even win a few times. But those wins don't compound. They don't build. They just feed the cycle of action, the addiction to being in the market instead of being strategic about the market. I spent years trapped in that cycle. I'd wake up, open the charts, and immediately start looking for something to trade. It didn't matter if the conditions were right. It didn't matter if my best setups were even present. I just needed to be doing something. Because doing nothing felt like failure. It felt like I was wasting time, like I was missing out, like I wasn't a real trader if I wasn't actively trading. And the market punished me for it. Not dramatically. Not with one catastrophic loss that would have forced me to change. No, it punished me slowly, quietly, with a death by 1,000 cuts. A losing trade here, a break-even there, a small win that didn't cover the previous 2 losses. My account would inch up, then slide back down, then inch up again, and I'd look at my balance after 6 months and realize I'd gone absolutely nowhere. I was working harder than ever, spending more hours in front of the screen, analyzing more charts, reading more news, and yet my equity curve looked like a flat line with noise around it. That's when the doubt started creeping in. The voice that whispers late at night, When you're staring at your losing trades, wondering if you're even capable of this. Wondering if maybe you just don't have what it takes. Maybe the dream of being consistently profitable is just that, a dream. Maybe you should quit, get a normal job, stop torturing yourself with this impossible game. But then something happened. A conversation with a trader who managed a small fund, nothing massive, but consistent, profitable year after year. I asked him how he did it, expecting some complex answer, some proprietary indicator, some secret sauce. Instead, he pulled up his trading journal and showed me something that looked almost boring. He said, "I only trade 3 setups. That's it. 3. And I only trade them when 5 specific conditions align. If those conditions aren't there, I don't trade. I don't care how good it looks. I don't care if everyone else is jumping in. If my conditions aren't met, I do nothing." I stared at his journal. Pages and pages of days with 0 trades. Then, scattered throughout, a handful of entries with massive risk-reward ratios. 3-1, 5-1, 8-1. His win rate wasn't impressive, maybe 50%, sometimes less. But his expectancy, the math that actually mattered, was incredible. He was making far more when he was right than he lost when he was wrong, and he was only taking trades where the probability and the payoff both justified the risk. That's when it clicked. The 30/90 map isn't about finding more opportunities. It's about finding the right opportunities and having the discipline to ignore everything else. It's about building a filter so precise that only the highest quality setups make it through. And then, when those setups appear, you act with full conviction, full focus, and full size relative to your rules. You're not gambling. You're not hoping. You're executing a plan that's been tested, refined, and proven to have an edge. The professionals know this. They know that their value isn't in their ability to predict the market. It's in their ability to wait for the market to meet their criteria. They're not reactive. They're selective. They don't trade the market they see. They trade the market they've been waiting for. But here's the hard part, the part that most traders never overcome. Waiting feels like losing. When you're not in a trade and the market is moving, your brain interprets that as pain. It's the same neural circuitry that fires when you experience loss. You feel like you're falling behind, like opportunity is slipping through your fingers, like you're failing in real time. And that pain is so uncomfortable that you override your rules just to make it stop. You take the trade you know you shouldn't take, not because you believe in it, but because being in a trade, any trade, feels better than sitting on your hands. This is where most people self-destruct. Not because they lack skill, but because they can't tolerate the discomfort of inaction. The market becomes a mirror for their internal state, and if they can't sit still with themselves, they can't sit still in the market. I had to learn this the painful way. There was a week where I had a perfect setup forming. Everything I'd been waiting for, structure, volume, sentiment, it was all aligning. But it wasn't ready yet. It needed 1 more day, maybe 2, to fully develop. So I waited. And during that wait, another trade caught my eye. It wasn't one of my setups. It didn't meet my criteria. But it was moving, and I was bored, and I convinced myself I could manage it. I entered. The trade immediately went against me. Not violently, just enough to trigger my stop and take me out for a small loss. An hour later, my original setup triggered perfectly. And I couldn't take it. Why? Because I'd just taken a loss, and my emotional state was compromised. I was frustrated, doubting myself, second-guessing my analysis. The trade I'd waited for, the trade that met all my conditions, ran exactly as I'd predicted, and I missed it because I couldn't handle doing nothing while I waited for it. That single moment of impatience cost me. Not just the capital I lost on the bad trade, but the massive opportunity on the good one. It was a double penalty, and it taught me something I'll never forget. The cost of a bad trade isn't just what you lose on that trade, it's what you miss because you took it. The professionals understand this deeply. They know that capital isn't just money, it's emotional bandwidth. It's mental clarity. It's the ability to execute when it matters. Every time you take a trade that doesn't meet your criteria, you're not just risking dollars. You're risking your psychological state. You're introducing noise into your system. You're teaching your brain that the rules are optional, that discipline is negotiable, that you can't be trusted to follow your own plan. And once that erosion begins, it compounds. One exception becomes two. Two becomes five. Before you know it, you're not following a system anymore. You're just reacting, justifying, rationalizing, and wondering why nothing works. So the first principle of thinking like a hedge fund trader is this ruthless elimination. You eliminate everything that doesn't fit your edge. You eliminate the trades that look good but don't meet your criteria. You eliminate the noise, the opinions, the headlines, the hot tips. You eliminate the impulse to trade just because you're at your desk. And in that elimination, in that deliberate reduction of action, you create space for the 30% that actually matters. The professionals build checklists. Not because they're robots, but because they know their emotions will betray them. They know that in the heat of the moment, when price is moving and adrenaline is pumping, they'll rationalize anything. So they create non-negotiable filters. If the setup doesn't check all the boxes, they don't trade. Period. No exceptions. No negotiations. The checklist becomes their protector, their guardian against their own worst impulses. But elimination alone isn't enough. You also need to know what you're eliminating for. You need to know what the 30% looks like. And this is where most traders get lost. They think they need to find some magical setup that nobody else knows about, some secret pattern hidden in the charts. But that's not it. The edge isn't in the pattern. The edge is in the context. It's in understanding when a common pattern has the highest probability of working and the highest potential payoff. The professionals look for confluence, not complexity. They look for moments where multiple factors align, where the chart structure meets volume behavior, meets institutional positioning, meets sentiment extremes. These are the moments when the crowd is maximally wrong, when the market is about to reprice sharply, when asymmetric opportunity exists. Let me give you a concrete example. Support and resistance levels are everywhere. Every trader knows them. But not all support and resistance levels are equal. Some are just lines on a chart. Others are battlegrounds where billions of dollars have been fought over, where institutions have positioned, where the crowd has formed unshakable beliefs. When those levels are tested, especially after a long period of consolidation, the reaction is often explosive. The professionals wait for these moments. They wait for the level to be tested, for the crowd to commit, and then for the false break. That moment when price pushes below support or above resistance just enough to trigger stops and shake out weak hands, and then violently reverses. That's not random. That's intentional. That's liquidity being swept before the real move begins. And the professionals are positioned for the reversal, not the break. This is what the 30/90 map reveals. It shows you that most levels don't matter. Most breakouts fail. Most reversals are just noise. But when the right level, at the right time, with the right context, gets tested in the right way, the probability of a significant move spikes dramatically. And that's where you focus. That's where your capital goes. That's where your attention lies. Everything else is just market weather, interesting to observe but irrelevant to your strategy. The map isn't about predicting every move. It's about identifying the specific conditions where your edge is highest and your risk is lowest, and then waiting, sometimes for days, sometimes for weeks, for those conditions to appear. Now here's where it gets deeper, where the psychology really starts to bite. Because even when you know what to look for, even when you've built your filters and your checklists and your criteria, there's still one enemy that will try to sabotage you. Your ego. Your ego wants to be right all the time. It wants to prove that you're smart, that you're special, that you can see things others can't. And the ego hates sitting still. It hates admitting that you don't know what's going to happen next. It hates the uncertainty of waiting. So it pushes you to trade, to act, to do something, anything, to validate its existence. And every time you give in to that voice, every time you take a trade to feel smart rather than to execute your edge, you're reinforcing the very behavior that keeps you stuck. I had to confront this directly. I had to sit with the uncomfortable truth that most of my trading was driven by ego, not by edge. I wanted to be the guy who caught every move, who predicted the big crash, who knew what was coming before everyone else. I wanted the validation, the recognition, the feeling of being right. But the market doesn't care about your ego. It doesn't care if you feel smart. It only cares about one thing: did you execute your plan with discipline? And when I finally let go of needing to be right, when I accepted that I could miss 90% of moves and still be profitable if I nailed the 30%, something shifted. The pressure lifted. The anxiety faded. I stopped feeling like I had to prove something every day. Instead, I became a hunter. Patient. Focused. Waiting for the exact conditions I'd trained myself to recognize. The professionals live in this space. They're not trying to impress anyone. They're not posting every trade on social media. They're not chasing the market's attention. They're operating in the shadows, executing their plan, taking their profits, and moving on. They understand that consistency comes from repetition, not variety. They trade the same setups, in the same conditions, with the same rules, over and over and over again. And that repetition, that monotony, is what builds the edge. Because while everyone else is chasing the new, the exciting, the different, the professionals are refining the known. They're becoming so familiar with their 30% that they can execute it in their sleep. They've removed all the variables except the ones that matter. They've eliminated the guesswork. They've turned trading into a process, not a performance. But here's the paradox. To think like a hedge fund trader, you have to stop thinking like a trader. You have to start thinking like a business owner. You have to view your trading account as a company and yourself as the CEO. And the CEO's job isn't to work harder. It's to allocate resources efficiently. It's to say no to bad investments and yes to great ones. It's to protect capital, manage risk, and optimize for long-term survival. The amateurs think trading is about making money. The professionals know trading is about not losing money. Because if you can avoid the big losses, if you can stay in the game long enough, the big wins will eventually come. They always do. But only if you're still standing when they arrive. This is why the 30/90 map is so powerful. It forces you to think in terms of allocation, not prediction. You're not asking, what's the market going to do? You're asking, where should I allocate my capital for the highest expected return with the lowest risk? And the answer is almost never everywhere. It's specific, it's selective, it's deliberate. The professionals don't diversify by trading more. They concentrate by trading less. They put their capital in the few places where they have genuine conviction, genuine edge, genuine asymmetry. And they size appropriately, not emotionally. They're not trying to get rich on one trade. They're trying to extract consistent value from their edge over time. And here's what happens when you adopt this mindset. Your stress drops, your confidence builds, your equity curve smooths out. Because you're no longer fighting the market. You're no longer fighting yourself. You're just executing a plan that you've designed, tested, and trusted. The market becomes less chaotic. Not because it's actually changed, but because you're only looking at the parts that matter to your strategy. You're filtering out the noise. You're ignoring the distractions. You're focused on the signal. And when the signal appears, you act decisively, confidently, without hesitation, because you've been preparing for this exact moment. You've visualized it. You've rehearsed it. You know exactly what to do. But let me be clear about something. This isn't easy. It's simple, but it's not easy. Simple means the rules are clear. Easy means following them is effortless. And following these rules will never be effortless. There will be days when you're bored out of your mind, watching the market move without you, feeling like you're wasting your time. There will be moments when you miss a move because you waited for confirmation, and part of you will scream that you should have jumped in earlier. There will be stretches where your setups don't appear for weeks, and you'll start doubting whether they even exist anymore. This is the test. This is where most traders break, because they can't tolerate the discomfort of doing what works. They'd rather feel busy than feel bored, even if busy means broke. The professionals have made peace with boredom. They've accepted that most of their time will be spent waiting, watching, preparing. They've accepted that their value isn't measured by how much they trade, but by how well they trade when it matters. They've learned to separate their self-worth from their activity level, and that separation, that psychological distance between who they are and what they do, is what allows them to execute with clarity. Because they're not trading to validate themselves. They're trading to extract value. And those are two completely different games. So how do you build your own 30/90 map? You start with data. You go back through your trading history, whether that's 6 months or 6 years, and you analyze every single trade. Not just whether you won or lost, but why you took it, what conditions were present, how it played out, and what the result was. You're looking for patterns. You're looking for the setups that consistently produced your best results. The time windows when you were most profitable. The market conditions where your strategy thrived. The instruments where your edge was clearest. And just as importantly, you're looking for the opposite. The trades that consistently lost. The times when you were most vulnerable. The conditions where your strategy failed. The patterns you kept repeating even though they never worked. This is your raw data. This is the truth your emotions have been hiding. And when you lay it all out, when you really look at it honestly, you'll see something. You'll see that most of your profits came from a small number of trades. And most of your losses came from a large number of mediocre trades. You'll see that your best trades had certain characteristics, certain conditions, certain contexts that made them different from the rest. And you'll see that your worst trades usually came when you ignored those characteristics, when you traded outside your conditions, when you let emotion override your plan. This is your map. This is your 30%. These are the trades you should have been focusing on all along. Once you have this map, you guard it. You make it your filter. You make it your checklist. You make it the standard that every potential trade must meet before you even consider pulling the trigger. And you enforce it ruthlessly. No exceptions. No negotiations. No maybe this time rationalization. If the trade doesn't fit the map, you don't take it. You watch it. You learn from it. You analyze it. But you don't risk capital on it. Because you know you've proven with your own data that these trades don't produce consistent profits for you. They're distractions. They're noise. They're the 90% that doesn't matter. And then you wait. You wait for the 30% to appear. And when it does, when everything aligns, when the market presents you with exactly the setup you've been preparing for, you execute. Fully. Completely. With total conviction. Not recklessly. Not emotionally. But with the calm confidence of someone who knows they're playing their edge. You size appropriately. You set your stops based on structure, not fear. You define your profit targets based on market behavior, not greed. And you let the trade play out. You don't micromanage. You don't second guess. You don't exit early just because you're uncomfortable with uncertainty. You trust the process. You trust the map. You trust yourself. And here's the beautiful part. When you trade this way, when you only take the trades that meet your criteria, your psychological state transforms. You're no longer anxious about every tick. You're no longer obsessing over unrealized profit and loss. You're calm. You're patient. You're present. Because you know you've done everything right. You've followed your plan. You've executed your edge. And whatever happens from here, whether the trade wins or loses, you're okay with it. Because you didn't break your rules. You didn't sabotage yourself. You didn't let emotion hijack your decision. You simply executed a trade that had positive expectancy, and you know that if you keep doing that, over and over again, the math will work in your favor. This is what it means to think like a hedge fund trader. It's not about having more information. It's not about being smarter than everyone else. It's about having a clear edge, a defined process, and the discipline to execute it consistently. It's about understanding that your job isn't to trade the market, it's to manage yourself. The market is going to do what it's going to do. You can't control that. But you can control whether you show up prepared, whether you follow your rules, whether you protect your capital, Whether you stay in the game long enough for your edge to play out. That's all you can control. And ironically, when you focus only on what you can control, your results improve dramatically. Because you're no longer fighting chaos. You're operating within it. The 30/90 map isn't just a trading framework. It's a life philosophy. It's the recognition that not all effort is equal, that not all activity produces value, that success comes from focus, not frenzy. It's the understanding that most of what you do won't matter, and that's okay, because the few things that do matter will more than compensate for everything else. It's the acceptance that excellence is built through elimination, through saying no more than you say yes, through choosing quality over quantity in every dimension of your life. And when you internalize this, when you really live it, trading stops being stressful and starts being meditative. You're not scrambling anymore. You're not desperate. You're strategic. You're patient. You're free. So here's your challenge. For the next 30 days, track everything. Every trade you take, every trade you consider but don't take, every moment of hesitation, every moment of impulse. Write it all down. Be brutally honest. Don't sugarcoat. Don't rationalize. Just document. At the end of 30 days, analyze the data. Find your 30%. Find the trades that worked. Find the conditions that aligned. Find the moments when you were truly operating with edge. And then commit. Commit to only trading those conditions. Commit to ignoring everything else. Commit to becoming so selective, so disciplined, so patient, that the market has no choice but to pay you for your precision. Because the truth that took me years to accept is this: the market doesn't reward activity, it rewards accuracy. It doesn't pay you for being busy. It pays you for being right when it matters. And the only way to be right when it matters is to eliminate everything that doesn't matter. That's the map. That's the edge. That's how professionals think. And now you know it too. Not as theory, but as something you can build, something you can execute, something that can transform your trading from chaos into clarity. The 90% will always be there, tempting you, distracting you, pulling at your attention. But the 30%, that's where the gold is. That's where your future is. That's where you need to live. And once you commit to living there, once you make that shift from trader to operator, from reactive to strategic, from scattered to focused, everything changes. Not overnight, but inevitably. Because the math is on your side. And in this game, math always wins.